As always, we'll take a look at global energy commodities to start the show. Brent still walking that really tightrope, mostly driven here, prices going above $90 a barrel, driven primarily by the crises in the Middle East and, of course, tight supply forecasts going forward into the future, and the continued tight lead that OPEC is keeping on production within OPEC and OPEC Plus, and WTI North America also tracking the same trajectory. Natural gas up at the end of the week, and RBOB gasoline up also by 1.94%. Let's take a look at global equities markets around the world. Of course, starting here domestically in Nigeria, the oil share index closed the trading week on Friday up by 71 basis points to close at 102,314.56 points. A fair amount of deals, volumes, and values there, but the equity market capitalization ended the week at 57.86 trillion naira. Let's take a look at African equity markets. You asked, we delivered. We're now taking a focus on African equity markets, starting with Johannesburg. Almost a flattish end to the week of trading there in Joburg, up by 0.01%. And big news on Johannesburg, because We Buy Cars, a second-hand car dealer, did a listing in the markets on Thursday. That helped to keep the market fairly flat at the end of the week. Positive territory still. In Ghana, on Accra, the stock exchange, also up at the end of the trading week by 0.07%. And interestingly, the GSC in Ghana is up 9.9% year to date. So not doing badly, but look at Nairobi. At one point this year, the Nairobi Stock Exchange was said to be the best performing stock exchange in Africa. It closed the week up by 0.44%. And finally, the Moroccan index in Casablanca, last day of trading was Tuesday, obviously due to the Eid holidays and festivities, closing the markets there at 13,341.29 points. Let's take a look at global equities markets from elsewhere in the world. And I believe we're going to look at Wall Street here. Not a very good look for Wall Street on Friday. That's primarily because there's signs that the US economy may be heating up again. Inflation is up, jobs are up, which may signal that the rate cuts expected from the Fed this year, at least the quantum of rate cuts, may not actually materialize. So traders not taking heavy bets there. Look at Dow, down by 1.21%, S&P down by 1.43%, and NASDAQ down by 1.63%. So not a great week there for Wall Street. Now, my top picks for the week. The big business stories first. Kristalina Georgieva, who is in the final lap of her first 5-year term at the IMF, when she was speaking at the Atlantic Council event during the week on Thursday, said that the decade of growth for the world's economy has been a bit weak. Central banks around the world haven't been able to fully tackle inflation. There's rising debt levels from many economies around the world. And the IMF is predicting a 3.1% growth rate globally this year. So she's saying that with all the global and geopolitical crisis, we're entering a potential decade of weak growth around the world. But there is still an opportunity to prevent the fragmentation of the global economy. And we'll be looking forward to the IMF and World Bank spring meetings coming up very soon to see what world leaders feel about this. Next big story here, which I'll be talking about with one of my guests or two of my guests later, is that Ethiopia faces the risk that it may need to devalue its currency as part of an IMF bailout deal. And many African countries know that if you're going to tap into an IMF bailout deal, chances are that you will have to move to a free and liberalized currency exchange regime. Now, the Ethiopian local currency, the birr, is facing a threat of devaluation. Of course, Ethiopian authorities not so keen on that deal, but Paris creditors and China and some of the countries' international creditors have had to suspend repayments from Ethiopia on debt. It defaulted in December last year. So it's really facing some macroeconomic headwinds and may have to ultimately look at currency reforms, which obviously have huge implications in terms of inflation and other economic risks. Let's take a look at SocGen. SocGen in Morocco. SocGen is France's third largest listed bank. It's selling its 57% stake to a Moroccan conglomerate called the Saham Group. Not only that, it's selling its equipment financing businesses as well as part of a global move to consolidate its assets and strengthen its business in its home market of France and of course in Europe. So SocGen, they're moving to divest to the tune of $797 million. That's about 745 million euros to a Moroccan conglomerate. Good news there for the Moroccan banking market, I guess, in terms of more domestic ownership of banking assets. Nigeria is introducing a solar subsidy as part of a $750 million deal with the World Bank. Now, it's important to bear in mind that this solar subsidy is not a subsidy on consumption or use of solar energy. It's a subsidy that's going to be given to the operators and developers of solar equipment, focusing primarily on mini grids and stand-alone systems. But in order to tap into this subsidy, you have to be providing these services to underserved or last mile communities. So good news there for the solar energy sector in Nigeria. And finally, the US dollar is seeing its best performing week since September 2022. Huge implications there for the yen. The Japanese yen has fallen to a 34-year low against the US dollar. Of course, the US has been pursuing looser fiscal policies and tighter monetary policies, which are helping to strengthen the dollar. I'm sure frontier markets and emerging markets around the world will be watching this because, of course, the strengthening of the US dollar has implications in terms of more expensive imports into other parts of the world. And, of course, imported inflation could be a risk. But good performance there from the US dollar. And of course, we'll be talking about some African currencies a bit later in the show. That's it for my top picks this week. And now let's take a look at top stories from around the world in the past week. The European Central Bank on Thursday indicated that its current level of monetary policy restrictions would be reduced if inflation continues to move towards its 2% target. The ECB held its key rate steady for a fifth straight meeting during the week while signaling rate cuts ahead. In the US, surging gas prices and sky-high mortgages and rents sent inflation rising more than expected in March, according to Americans' prolonged and painful battle with high costs. This could force the Federal Reserve to keep rates higher for longer. US consumer prices picked up again last month, vaulting to a 3.5% increase for the 12 months ended in March. According to the latest consumer price index data released on Wednesday by the Bureau of Labor Statistics, that's up considerably from February's 3.2% rate and marks the highest annual gain in the past 6 months. The World Trade Organization has released a new report this month looking at the global trade outlook and statistics. On the original trade outlook for Africa, the report added that if current projections hold, Africa's exports will grow faster than those of any other region in 2024, up 5.3%. However, the WTO said this is from a low base since the continent's exports remain depressed after the COVID-19 pandemic. Nigeria Exchange Group plc has acquired a 5% shareholding in Ethiopian Securities Exchange as it seeks to expand capital market activities in East Africa and across the continent. The Lagos-based company known as NGX made the investment alongside institutional investors, including FSD Africa and Trade and Development Bank Group, during a capital raising exercise organized by the Ethiopian Exchange. The Nigerian firm sent an email on this without mentioning how it invested. The percentage shareholding could potentially increase to 10% if approved by the Nigerian Bourse's board. Now for some Nigerian bank results released in the past week. Guarantee Trust Holdings plc announced gross earnings of 1.187 trillion naira, up 120% from 539.2 billion in the previous year's report. Additionally, foreign exchange revaluation gains of 449.3 billion naira played a pivotal role, contributing 37.24% to the gross earnings of the group. In addition, the group proposed a final dividend of 2.70 naira and declared a profit before taxes of 609.3 billion for 2023. Zenith Bank plc revealed its audited financial statements for 2023, recording 2.13 trillion naira in gross earnings, marking a 125% increase from the previous year. The group also recorded profit before tax of 796 billion naira and profit after tax of 677 billion naira, the highest of Tier 1 banks' results released thus far. The group proposed a final total dividend of 4 naira per share. UBA Nigeria PLC reported its audited accounts for 2023, revealing gross earnings of 2 trillion naira, a significant increase from the 835 billion recorded just a year earlier. This achievement marks the bank's highest gross earnings on record. And finally, Access Holdings PLC has also released its 2023 results, recording a 335% growth in pre-tax profits to 729.01 billion from 167.6 billion in 2022. The group grew gross earnings by 87% to 2.594 trillion naira from 1.387 trillion in 2022. Of course, all the bank results come on the heels of a new directive by the CBN on the recapitalization of banks. In other news, Nigeria's crude oil production for March dropped to 1.23 million barrels a day, according to the latest data from OPEC. This was a $92,000 barrel drop, I beg your pardon, from the 1.32 million daily production in February 2024. However, according to secondary sources, the country's crude oil production for March stood at 1.39 million barrels a day, marking a 38,000 daily decline from 1.43 million barrels. Well, that's it for our top stories.